Hi, this is Carmel with the Financial Tea, where we talk about money, not people, unless it's about our money. So, today's topic is Warren Buffett. Am I the only one who thinks that he's starting to lose it a little bit the older he gets when it comes to investments? He's not the same. And once again, I have the complete utmost respect for Grandpa Buffett. You know, I love Warren Buffett. Learned a whole lot about him, about investing through him. But it seems like lately, a lot of his actions are very contradictory to the actions that he actually took that made him so successful in the first place. So that's just the thing I want people to understand, or the point that I'm just trying to make. So first and foremost, he goes on and he sells Delta Airlines and many of his airline stocks, Southwest Airlines, etc. And he sells them at their absolute lowest points, even though he basically bought them at a cost basis that was significantly higher. And so one of the things I've learned from Buffett was that you never do that. You know, like he speaks about that all the time, that's not something that you do, right? In fact, his rule is what? Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. So to turn around and to do that, I'm just not understanding why. And I hear that he says, yes, it's because, airline industry has taken on a totally different point, et cetera, et cetera, et cetera. I understand that the airline industry definitely is going to be forever changed, or at least change in the very long run. But once again, one of the things that I've also learned from Buffett, we're long-term investors. And as long-term investors, things would have eventually turned around for the airline industry. I mean, come on. They have nowhere else to go but up. What's so interesting about Buffett is, that first of all, what was he doing with all of those airline industries in the other place, in the first place? Why does he have so many companies all from one sort of industry? That's like investing basics 101. You have to diversify, and diversify just doesn't simply mean to have a bunch of different stocks, but you should definitely not have all, so many stocks from all one sector, because if something happens to that sector, what eventually happens, your whole portfolio is done. So, I just don't understand how and why he was walking around with all of those stocks to begin with, in the same sector. I just don't understand. And of course, Buffett has an insanely huge portfolio with money, that most of us, definitely me, can't even fathom right now. So I am not here to, discount any of that. But the bottom line is still, you pick a company, you find a company that has, that's basically the best performing, or you believe has the best chance of performance out of this sector, and you move on. But to have 3-4 different companies all from the same sector, that's not much diversification. So I'm shocked about that. And then speaking of diversification takes me to my next point about index funds. What's up with Buffett all the time touting index funds all of a sudden? Literally, I understand why index funds may be good, or considered an option for people who are basically not knowledgeable. But for people who are knowledgeable about investing like he is, and there are many amongst us who are, why index funds? Because once again, if you're knowledgeable, you can easily outperform the market as compared to consistently being riding along with the market. And then keep in mind, index funds are still, in fact, funds, which means that there are fees attached with that. So you have other people coming out and basically taking a percentage of your cut, simply because you didn't, take the time to learn how to invest, or you don't care to invest. So I don't understand why, he's going around all of a sudden spinning index funds when he knows daggone well index funds is not what basically built his wealth. So these are just the points that I'm just thinking about Buffett. I'm quite sure there's other things that comes to mind. And once again, of course, I'm no Buffett. I know some of you are saying, look at this peon talking about Buffett, talking about Buffett, like she's even worth a 0.01% of what Buffett's worth. Understood, whatever. But the bottom line is, I'm sorry. Lately, I'm just, and I love Buffett. I learned a whole lot from Buffett. I study Buffett. But lately, I just don't understand where a lot of his advice is coming from, where his actions are coming from. The biggest thing I can say about Buffett, and this is one thing I do want to just stress to all of you who are quite possibly investing, and you can feel free to leave comments if you agree or even disagree, but one of the things too, this is one thing I always stress, that we should not, we definitely should learn from Buffett and people like him because they basically have done what it is that we want to do. But we also have to be very mindful of the kind of information that we follow. And why do I say this? Because Buffett basically built his billions already, right? And so you have to understand, this man has been investing since he was 11. Okay, so the bottom line is he's got 79 years worth of compounded interest working on his behalf. Something that most of us will basically not see, in a lifetime, unless, you're 15, 16, I don't know, watching this video. All right. But the bottom line is most of us, realistically are not going to see that kind of returns in our lifetime. And so the bottom line is, you have to understand that most of his wealth was built through, in essence, compound interest. You could have been the worst investor in the world, but because you invested and you have 78 years of compound interest, you would have gained a massive amount of wealth. And so for people who want to disagree with that, run your numbers. Go ahead and run your numbers and tell me if I'm wrong about that. And so why do I want to say this? This is not to discount Buffett at all as an investor. I'm just saying that in the end, our goal is to get like Buffett. Period. And if you're anyone like me who started a little later in the game, then the biggest things we don't have on our side is time. We don't have all those years of compounded interest. So the biggest things that's going to be on our side is what? Our rates of returns. And so you have to understand that if you really want to be serious about growing your wealth, you can't necessarily look to who Buffett is right now. Hear me out. You can't look to exactly who Buffett is right now and take lessons from what he's doing right now and think that that's going to work for you in terms of building wealth. Why do I say that? Buffett is older. Right now, more than likely, his game plan, based on everything I just stated in the video, it looks like he's more concerned with wealth preservation, how to keep his money. Buffett definitely he's very knowledgeable. He's done his homework. He knows what quality companies are. And so 9 times out of 10, and he even reinforced that even before he sold out of his shares of the airlines, he reinforced that these are quality companies, well-ran companies, and CEOs, etc. So he's done his homework. And so he knows that in the end, that they too have the wherewithal to go ahead and eventually bounce back. So if he knows that, why did he pull out of that? You have to understand, my argument is more than likely is because he's concerned with wealth preservation. At this stage of his life, that's what people who are multi-billionaires, and especially older ones, compared to, let's say, Bezos, they're going to be more concerned with wealth preservation. If we're trying to grow our money, we're not trying to preserve it. What are you trying to preserve? $10? You trying to preserve $10? Hell no. You're trying to go ahead and grow that money. And so then that means then not everything that Buffett does, you can turn around and do. If you want to know how to be successful, the real clues lies with what Buffett did. All right. Same thing. You got these sites who turn around and they're posting, here's Buffett's portfolio. Here in Buffett's portfolio, and Coca-Cola. That's one of the biggest things people love to talk about. Yes, Coca-Cola is a very safe and stable company, but Coca-Cola, if you look at it, lately How much has that thing really been growing? And then people want to talk about dividends. Hell yeah, I understand the point of dividends. I too focus, understand the importance of dividends. But you have to understand, if you're trying to build wealth, most of us do not have the kind of money, once again, as Buffett does, to turn around and even make significant amounts of money from these dividends. And because you basically have to grow those shares significantly over time in order for the dividends to eventually make sense, financial sense for you. And so the biggest thing, once again, I keep stressing is that what? It's that growth that's going to be more important. And so people turning around and buying Coca-Cola because Buffett does it, but Buffett got it when it was like 25 cents a share. Now you're trying to go ahead and buy it when it's over $100 a share, and it's moving at less than a 5% rate per year. In terms of average annual returns. But yes, it got a nice little hefty, I don't remember exactly what the dividends are. I mean, come on, do the math. And then when you add up your little 2, 3, 5, 10 shares, 100 shares that you got compared to Buffett's 70 million shares, then you come to understand why you can't do what Buffett does. You want to focus on these companies that are growing to build that wealth. So going back to it, if you want to go ahead and grow your money, and once again, coming from a non-Buffett, but someone who does love Buffett, okay, pay more attention to what he did, the actions that he took to get him there, and less attention to what he's currently doing now. Okay, so this is it. This is my thoughts. If you really like this content, please like the video. Feel free to leave a comment. I promise I do respond back. And share the video out, okay? And subscribe to the channel. That's it.